Now I posted a link under announcements, which will give you a list, an IPO list of companies that have done IPOs. You can do a popular one, or you can do a company that's relatively unknown. It's entirely up to you. So if you go to the list, you'll see recent IPOs, and you can go back month by month. That's October. These are mostly companies you've probably never heard of before. And you can click on any one you want. And once you look at the company, it's going to give you what exchange they're on, the NASDAQ or the New York Exchange, and most important, it's going to give you the symbol, the ticker symbol. I chose Twitter. And if you go to Yahoo Finance and just type in Twitter over here, and then what you do is you go down to what's the SEC filings. That's the Securities Exchange Commission filing. And you're looking for the 10K. The 10K is the annual report right here. The 10Q is filed every quarter, as you can see, quarterly report. 8K are forms that are filed for information purposes. They're required, but they're filed for various information purposes. For example, change in directors or principals, officers, things like that. Results of operations. You want to file the 10K annual report and then go to the full filing. And the full filing is right here. And if you recall from the previous video I made, we're going to look at the income statement, the balance sheet, and the statement of cash flow. We start with the balance sheet first. And it's going to give you a 2-year history on the, make this a bit bigger. It's going to give you a 2-year history as far as what's been going on with the balance sheet, the company's equity position. Remember, the balance sheet is a snapshot in a period of time. So the first thing is we're going to look at total assets. The total assets right here, and the total assets have gone up since December 31st, 2013 to 2014. It's gone up relatively significantly, and then you look at the different components, the largest sections of the balance of the assets, and it appears that short-term investments have gone up, as has cash and cash equivalents. So it's almost doubled cash and cash equivalents. That's usually a pretty good sign. And then we go down to liabilities and we see what's going on with liabilities. Looks like liabilities doubled here. Accrued and other current liabilities, that's doubled. Any other huge jumps right here? Capital leases, it appears, convertible notes. There was no convertible notes in 2013, yet there were in 2014. And deferred and other long-term tax liabilities have gone down. Then we look at the total stockholder equity. Remember, the assets have to equal liabilities. Total assets equal total liabilities plus total equity. So total equity has gone up. So it's gone up year over year, and that's not a bad thing. So it means the equity position of the company is doing okay. Now we want to look at the income statement. This is good. It gives us 3 years. Revenues, remember we said earlier, revenues minus expenses equals net income. There it is. With this particular company, it looks like they're losing money. So revenues are going up year over year, and what you want to do is find out why they're losing money. And sales and marketing, research and development, sales and marketing. You can see these two components right here have jumped up significantly, especially sales and marketing year over year. So they're putting a tremendous amount of money into research and development. And one thing you can do here is if you look at the amount of money they spent in research and development, also known as R&D, and then you look at how much money they lost. This company could have, in theory, this company probably could have turned a profit if they had spent next to no money or a very little amount of money in research and development, and maybe cut some back in cash backs, cut spending back in sales and marketing. They probably could have turned a profit. However, it appears that the loss has gone down from 2013. So it's going to be interesting to see what's going on in 2015 with this company. Now we look at the statement of cash flow. The statement of cash flow is going to be, remember, cash from operations, FIO, F-I-O, cash from operations, financing, and investing. So operations and net cash provided by operations. So it looks like they took a little cash in operations. And they used a lot of money in investing. They purchased a lot of marketable securities, purchased property. And then we look at financing. And looks like they sold off notes. That's how they're getting a lot of money. They're selling off notes that they own. Proceeds from issuance of convertible notes. They purchase convertible note hedges. We'd have to read the footnotes of this company to find out the details of what they're doing. And so it looks like they started, if we can get to changes in cash, right here. So cash at the beginning of the period, right here, and then cash at the end of the period. And as you can see, it flows over from the following year. They started, it looks like 2012, they started with this amount of cash. They ended the year with this amount of cash. Then it carries into the next year, 203, 328. They start the new period with that same amount, the carryover amount, and they end. So it looks like they're building up their cash and cash equivalents year over year, but they're spending money on research and development and marketing. Now, out of curiosity, one thing we want to do is we want to go back to the company and let's see, what has the stock looked like in the past. We looked at the stock performance over the past 3 years. And the stock started out in November of 2013, I believe that was the IPO date. It started out at what, $43.90 a share approximately. Opened at $40.50 maybe. And today it's down to $25.02. So we know they lost money for the past 3 years. And if we look at, we know the 2014 numbers, but if we go back to SEC filings and we look at some recent filings for 2015, remember 10Q was the quarter. The most recent quarter was filed November 6, 2015. We go to the income statement then, and it's going to tell us, here it is. This is 3 months ended, September 30th. Looks like they're still losing money. They're still losing money, but the losses apparently seem to be subsiding, means they're not losing as much money as they once were. And if we look at the balance sheet for 2015 here, once it loads, here it is. All right, this could be a problem, and this would actually explain it a great deal. The balance sheet, remember, it's a snapshot point in time. So comparing September 30th, 2015 to December 30th, 2014, if you look at the cash positions, cash has gone down. Not quite in half, but they've lost almost half their cash. That could be a significant problem. And that would explain why a company that's losing money suddenly has half the cash they did 9 months later. So from December 31st, 2014 over here down to September 30th, 2015, the cash position has gone down significantly. Then we look at nothing has changed too much in the liabilities. What I'm doing is I'm looking at the liabilities, and nothing has changed too significantly. Everything is still, year over year, it's relatively decent. And then if we look at total stockholders' equity, total stockholder equity is still building, and it looks like they're selling. They've issued. I'm looking at the difference between the common and preferred stock. What I want to do is I want to look at the statement of cash flows and see. Always remember, when a company is losing money, they have to be getting cash in from somewhere. And I'm going to look at the statement of cash flow to find out what's going on here. Cash from operations. So they're still getting cash in from operations. And then we look at so they're selling off some marketable securities, and they haven't done much in the way of right here. If we look at net cash provided by or used in financing activities, they use some money in financing. And if you remember the net increase or decrease in cash and cash equivalents, if you think back to the balance sheet, remember I said it went down by half approximately? Well, here's your answer right here, or here's what happened. There was an overall decrease in cash and cash equivalents. Look at last year, 2014, September of 2014, there was a significant increase in cash and cash equivalents. This year, it's down. So they burnt through a lot of cash. They burnt through a lot of cash. And here it is right here. This carries over from the balance sheet. Cash and cash equivalents at the beginning of the period and down. Okay, look at 2014. Cash at the beginning of the period, and they finished the year so it's gone up. They had an increase in cash in 2014 and a significant decrease in 2015. So if we go back to the stock here, charts, I want us to take a look at what happened during 2014, because remember the cash position was going up. So this goes back 5 years out. And if we look at 2014, yeah, here it is. You can graph it out. If this is the price of the stock trading in 2014. It went down, but as you recall, remember their cash, even though they were losing money, their cash position still went up, and it's reflected here. It went from 30 bucks a share all the way to $51 a share, 53 a share it looks like. So again, from May of 2014 all the way up through September 28th, 2014, it went from 30 to $53 a share. Now, a good analyst would realize that the company's burning through cash, and that might have been could have been a spike just because of technical trading or whatever it might be. However, the stock price went up, and then if you notice, once they burnt through all their cash and they started showing a decrease in the stock price and went up a little bit. And this was in April of 2015. Now here we are in December. So all the way from April of this year, from April, the stock dropped almost 10 bucks a share in 2 weeks, April 19th to the 26th. So 7 days, it dropped over 10 bucks a share, $12, $13 a share almost. And again, looking back in the financial statements, filed November 6, 2015, if you recall, the company blew through a lot of cash and their cash position went down. And then if we look on November 6th or November 7th, when the financial statement came out, the quarterly financial statement on November 6th, you look at it was $28 a share right around November 2nd, and then it dropped down to $25, and it's still going down to so when news came out first week or so in November that the company was lost half their cash on hand, cash and cash equivalents, you can see the effect it had on the stock price right here. It went down a couple of dollars a share. And so that's how you would explain Twitter. You would explain that the stock started out high, even though they were posting some losses, and once they were able to get some cash through financing, through selling off, borrowing, selling off convertible notes, things like that, and they were making some money from operations. They spent a lot in research and development, and the stock price isn't doing too well, and the company seems to be still losing money. And if we look at, you can go over here and read headlines. And this will tell you all about Twitter. This will tell you the stuff that's been going on with Twitter. And what we want to do here is we want to look back to view headlines, see if we can find it back to what's going on with Twitter. Okay, so we're going to look at Twitter stock slumps. Here it is. Here's a nice article. Remember that quarterly report came out November 6th of 2015. And this article right here is going to talk to you, put out by RBC Capital. It's going to talk about Twitter as a sell. They're calling Twitter as a sell, meaning that the stock is losing money. And they did the same thing on a much more deeper level than what we just did as far as analyses. They pulled apart the financial statements. So if you read this right here, it's down 29%. And here it is. Here are some fundamentals. The company, on the basis of net income growth for the same quarter, has significantly underperformed. And going back to headlines, another one I want us to look at is this right here, Motley Fool. They explain in detail some of the reasons why, and as you can see, it's a few of the things we just covered as well. So that is how to do an overview of a publicly traded company. If you have any questions or want me to review something in advance, please let me know, and I'll be happy to do so. Thank you for watching.